The cable traded lower today as the Federal Reserve announced the end of its bond purchasing program. With strong US data newly released and the UK real estate market slowing, I am going to discuss predictions for the pound US dollar currency pair with Peter O'Flanagan, head of trading at Clear Currency. Peter, you see the currency pair staying at 1.6, a similar level to today in the short term. Why do you think the currency pair will see little change within a month?
Well, I think fundamentally both the Bank of England and the Fed are on quite a similar path. We've seen both central banks now end their quantitative easing programs, and both central banks are now currently on a path to raising rates. The interest rate hike expectations for both seems to be on a similar path as well, looking towards mid-2015. I don't see that fundamental picture changing too much over the next month. And with that kind of leads me to look at the technical aspect. Looking at the technicals, sterling US dollar has been on a downtrend from July this year, and that downtrend has been held very much in place by quite a strong resistance line moving higher. That line towards the end of December comes in around the 160 level, with very firm support and historical support in and around the 158.70 level. In my eyes, we're going to need a big change in the fundamental picture to break through the 158.70 area, and that leads me to see pressure on the upside resistance level in and around the 160. And I think we'll see that under pressure as we come towards the end of this month.
You see the pound gaining some strength to trade at 165 in the midterm. What are your reasons behind your 3-month forecast?
Again, I think over the next 3 months there's going to be a bit of a change in the fundamental picture. There seems to be an awful lot of good news priced into the US dollar at the moment. Whereas if we look at the Bank of England recent statements, they've acknowledged their concerns about inflation. Looking at the FOMC statement from Wednesday evening, they seem to be have a diminishing view of inflation expectations. Both central banks have a key inflation target of in and around the 2% mark. And I see a higher risk in the US of inflation remaining persistently below that, particularly with the recent fall in oil prices and also other commodities like sugar as well. I think that's going to be a lag on the US inflation figure, whereas the Bank of England have accepted that, and that's been priced into the pair at the moment. In my eyes, that gives sterling US dollar some upside. Again, looking at it from a technical aspect, that 158.70 area has quite historical importance. We saw it hold support for 8 weeks through September to November in 2013. Again, we saw it hold resistance turn support from August 2012 to February 2013. And for much of 2011, it acted as a support as well. I think we're going to need a very big change in the fundamental picture to break down through this level. So again, that sees pressure going to the upside. Number one, challenging that resistance level in and around the 160 area. And again, a break above that, to me, brings us back to the 50% retracement level from the July bear trend, which comes in and around the 165 area.
What are your reasons for a strongly bearish trend in the long term?
Well, as I mentioned, overall I still see the GBP USD in a longer term bear trend. Obviously, looking out towards a year, there's a lot of different aspects that can impact it. But on the basis of things, looking at the Bank of England and in terms of what they've guided in terms of raising rates, they've been very consistent in their rhetoric in saying that rate hikes are going to be quite slow and steady, and essentially they're going to be developing a new norm in terms of rate expectations. I do expect the US economy to continue to outpace UK growth through next year, and I think the US will likely look to raise rates a little bit more aggressively towards the latter end of next year versus what the UK have planned. With that in mind, I see the 155 area as a good target. I think we may well see a break below that initially, but there's certainly a lot of a chop expected between 155 and 150. In and around the 152 area is quite a long-term support, going back as far as 2008, a trend line lining up from a technical level. So I think the price will be pushed to fair value in and around the 155 area.
Thank you for your insights, Peter. That's it from Forecasts today. Have a great weekend.